A few years ago, I spent an entire year trading a strategy that I knew worked. I had back tested it and it worked. I had seen other traders use it and it worked, but I was not able to put it together. Week after week, I was taking textbook trades, I was taking textbook setups, and I still could not gain any traction. I started questioning every single thing that I was doing, my analysis, my entries, my exits. What was it that I was doing wrong that it didn't lead me to have consistency using the strategy? Then one day, a trader I looked up to asked me one simple question that changed my whole perspective on trading. He said, "What stocks are you trading?" I listed off a few tickers, some random names that I found, did not really a lot of research on, and didn't really have a screener to find the best stocks. He just shook his head and he said, "Your strategy is fine, but you're trading garbage." That one conversation completely changed everything about my screening process, and now I only trade the best stocks in the market. Not all stocks are created equal. Some of them are leaders, some of them are weakness leaders and continue to go lower. You need to be trading the best stocks in the market, scanning for the best stocks, the best sectors, the best themes, and that's exactly what we're going to cover. The difference between profitable traders and everyone else is that profitable traders only trade the best stocks in the market. They don't care about buying the bottom. They don't care about buying the top. They don't care if the stock is already trending. They just want to be in the best stocks in the market because they know that those stocks provide the best opportunities. And the number one most important thing is that these traders are ruthlessly selective. They don't just trade any stock. They only trade the stocks that fit their criteria. Now, this is episode 6 of the swing trading series. Quick little recap of everything that we've been through. Episode 1, we laid the foundations. Episode 2, you learned everything about the market structure and how price moves. Episode 3 was about moving averages and finding the trends in the market. Episode 4 was everything you needed to learn about volume. Episode 5, you learned my entry Bible to getting the best entries in the market. So now you have a complete trading system, but that system is useless if you're not trading the right stocks. That's what this episode's about: scanning and finding the right stocks and how to know if you're trading a leading stock or a garbage stock. So let's get right into it. I'm going to show you exactly how to find these leading stocks in the market. All right, everybody, welcome to episode 6 of the swing trading series. Now, this is probably going to be one of the most important episodes because now we're going to start piecing everything together and understanding how to find the best stocks in the market, how to find the best sectors, the themes, the narratives, combining all that together with our technical analysis. That way we know that we're buying the best stocks in the market, because a lot of time you could have the right technical analysis, you could have the right risk management, the discipline, everything is on check, but you're literally trading the wrong stocks that are underperforming the market and not making big moves with the market. Now, our goal, especially with this strategy, is to trade the best stocks in the market that are outperforming and that are leading the markets higher and that institutions are piling into. That way we get into those names earlier, we get positioned in those, and then we can ride the momentum of the trend. Understanding this concept is incredibly important with swing trading because I see way too many traders trading the bad names in the market, not the ones that are strong. They're scared to trade relative strength because they think that the stock is extended. But you have to understand the reason why stocks get extended and the reasons why stocks go up is because they usually have a reason to go up. And that's exactly what we're going to speak about today, and how to find these stocks that have a reason to go up and trade the right sectors, the right themes, understand the narratives and the story of a theme in a sector and a stock, and how that can benefit the stock whenever it starts making its move. Now, without further ado, let's get straight into it, and I'm going to explain the top-down approach. If you're still watching this series, then by now you know that swing trading is the best way to make money in stocks, and you know that you could actually do it. You just need a little push. Now, this is why I'm hosting the 3-day live swing trading event, where I'm going to show you exactly how to place your first profitable swing trade, hold the biggest runners, find the best stocks, and be able to compound your account without having to take excessive risk, without having to quit your job, without having to go quote-unquote all in. This is built for the person that wants to stop blowing their accounts, wants to stop losing money consistently, and actually make returns in the market that aren't outlandish. For people that want to build real wealth over a long period of time and be able to compound their accounts. If this sounds like you can go to the link down below and grab your spot for the challenge. Now let's get straight back into the video. All right, so the most important part about this analysis is that you're going to use a top-down approach to figure out if you should even be trading in the market in the first place. And from there, you're going to find the best sectors, the best themes, and then the best stocks within those themes that you're going to be looking to trade. And this top-down approach looks something like this. So first thing you're going to do is you're going to start your scan of the market and you're going to analyze the market trend. Before you even look to trade an individual stock, you want to ask yourself, is the market trending up or is the market trending down? And is there even a trend in the first place, or are we just chopping and going sideways? If the answer is the market is trending up, you most likely want to trade the upside. Now, the market should also be favorable in terms of the momentum to be trading to the upside. So what I mean by that, it has to be above the moving averages, it has to be set up, it can't be too extended. And that's the first thing you're going to ask yourself. So you're going to assess the market and you're going to ask, is the market favorable right now in terms of your strategy? If the answer is no, and we're just chopping and not really doing anything, you're going to wait and reassess. You're going to recheck and analyze the market trend until there's a yes. Now, this is where most people end up failing in the markets because they think that they have to trade a stock every single day to outperform the market. But the truth is there's going to be many days where you're not going to be trading and many days where you're just going to be sitting on the sidelines waiting for that opportunity and kind of striking whenever the time is right, instead of thinking that you have to be in everything at every single moment in the market. Because the truth is you're not going to be able to catch every single stock that moves, but it's the ones that you do that are going to change your portfolio and really give you that kick and boost that you need to make a outperforming return on the year. Now, once we understand that the market conditions are favorable, the first thing we want to do is you want to scan sector strength. What does that mean? Well, we want to look through all the sectors in the market, and I'm going to show you exactly how to do that and figure out which are the strongest sectors. So we're going to start from the macro stance, and then we're going to go all the way down to looking at specific industries and specific stocks within that industry. So now we're going to rank these by relative strength and momentum. So we want to see what are the top 2 to 3 sectors in the market that are leading the market higher and showing the strongest returns. What I usually like to scan for is the sectors that are the strongest over the last week and the last month, showing some consistency. From there, we're going to start scanning stocks within that sector. And we're going to see, first of all, does the stock meet our criteria for a potential buy? So it has to be very tight. It has to have volume decreasing as the stock consolidates. It has to have the setups that we talked about, identifying those patterns to look for a potential trade on it. If not, we review and then scan for the next stock. If the stock does meet your criteria, you're going to filter by volume, setup, and then relative strength. And then you're going to qualify that potential setup. Is it ready for a potential buy? Is it close to a moving average? Is it close to breaking out? If the answer is yes, you're going to qualify it. You're going to create a watch list, and then you're going to start shortlisting these stocks. Well, what do I mean by a short list? Well, you're going to get a ton of different stocks through your scan that you're going to find that might look like good, but you want to qualify the stocks that actually look the best. The best traders out there are always focusing on a few different names and not the entire market, because again, it's going to be very hard to buy every single stock in the market, but it's going to be easy if you can narrow down your focus to a few of the stocks that you really want to buy. So what I personally like to do in my trading is I like to qualify and see and shortlist which stocks I'm looking to focus on, because the truth is I'm going to have 50 stocks by the end of my scan most likely, but I want to qualify only about 4, 5, or 10 different stocks. That way I know which to focus on in the morning and which to skip on. So from there, we're going to shortlist our stocks. So what we do is analyze stock charts, we evaluate, we define entry and risk parameters. If it makes sense, now we're going to ask ourselves, is this the best setup within our sector watch list? If the answer is no, we go back, we take that stock off of the list, and then we move on to the next stock. If yes, we go on to execute the trade or set up a potential execution into the next day, and then we finish and we start that checklist all over again. Now, personally, I like to scan the market every single day, but you can honestly do this every single week as well. Just the most important thing is you're focusing on a few different stocks and you know which stocks you want to focus on for the day or focus on for the week. Because the truth is, especially with this strategy, it is very important to be prepared to what the market is going to throw at you, because at the end of the day, we're looking to have preparation within what the market is going to give us, and then we're looking to execute without hesitation. But if we don't have the right preparation, it's going to be incredibly hard to execute. All right, so now that we understand what a top-down approach looks like, we're going to play it out in real time, and I'm going to show you the exact approach in real time and what exactly you should be scanning for. All right, so first thing you do is you start with a scan of the S&P 500 and the NASDAQ or QQQ on the cash index, and you can see what the trend of a stock is and what the trend of the market is. So starting here on QQQ, you could see we've clearly been uptrending over the last few weeks. We're above all the key moving averages. We are making new highs. Every single pullback pretty much gets bought. And what we're looking for now is understanding, all right, when the moving averages come up, it is likely that we're going to continue to go higher, because this is how a trending market works. It doesn't just go straight up. It'll use the moving averages and then it will continue its course from there. Now going to the S&P 500, you could see a similar kind of look. We broke over a key level of resistance. We're uptrending and now we're looking to buy pullbacks into this level of support to continue this trend to the upside. All right, so now that we know that we're going to be looking to trade the upside and that the market is in a bullish trend, we can start to look for the best sectors, the ones that are performing the best, and the ones that we want to be in, and the stocks that we want to be in as well. So here's how we're going to do that. Everything we're going to do is on tradingview.com, and we're going to keep it super simple to be able to break down all these stocks. The first thing you're going to do is you're going to head over to the home tab right here on tradingview.com. You're going to head over to the sectors and industries tab right here. And now we have a list of all the sectors within the market, but you can see that there's about 20 different sectors. We want to start narrowing this down to remember the 2 to 3 top ranks. To be able to sort the performance of these stocks, what we're going to do is head over to the 1 week performance, and we're going to sort it by the strongest 1 week performing sectors. And now you can see we have a top 3 list. So we have these commercial services, consumer durables, and technology services. And you want to look and scan through the top 2 to 3. So for this example, we're going to go through commercial services because it's the strongest sector. So this is going to show you US companies are engaged in commercial services. Now, you want to narrow this down to the actual industry. So you can head over to the industry right here, and you can see that there's a few different industries within this commercial services sector. And this will bring us closer to those themes and sectors that we can potentially look to play. So now again, we're going to head over to the performance tab right here, and we're going to sort for the highest performing stocks within the commercial services sector in the actual industry that these stocks are in. Now you have about 2 to 3 of these again, and now what you could do is click on 1 or 2 of these. All right, so now you click this industries tab right here, and what we have is a few different industries within the commercial services sector. Now we want to sort these by the strongest performance. That way we're able to find the industry that's been performing the best within the sector. Now you can see we get the top 2 to 3 of these. We have personal services, miscellaneous commercial services, and then financial publishing services. So let's just click on the first one really quickly so we can kind of see a list of all these stocks. You can see we have about 23 stocks that have performed the best, that are in the best industry within one of the best sectors. Now, when you sort these by volume, you could start to see some of the most liquid stocks within this industry. So you have CLIK, you have BIYA, you have RHI, and then you have Upwork. Now, a very important part to being able to narrow down the right stocks and sectors is you actually want to screen through these industries by using a screener that will narrow down all the stocks you're looking for. Because the thing is, you'll get a list of all these stocks within this industry list right here, but you don't know which stocks you actually want to scan through. This is what a scanner does. You're able to go through all these stocks, but you're able to narrow down the ones that match your criteria. So here's how we're going to do it. First of all, you have to understand the parameters of the screener. You're going to have price over 3 USD, market cap over 300 million USD, EMA 21 and 50 set to below price, average volume over 500K, and then ADR to over 2%. Now, what this does, guys, is it basically narrows this down to stocks that are A, liquid, and 2, are trending up higher above all the moving averages and that are showing the most strength in the market and that have enough of a big move to be able to sustain a potential entry. Now, what you want to do, and that's incredibly important, is you want to head over to this industries tab right here. And now you can start to notice we can actually sort these stocks by the industries. So what we want to do is we want to go back and we want to start making a list of all these industries that we were looking for. So for example, right here we have miscellaneous commercial services, financial publishing services, advertising, marketing services. These are all going to be services and industries that we want to add within our scan. All right, so now you can see we have about 40 stocks when I add all these industries here. Now, you can start to add different industries within our sector watch list. So remember, what we were talking about is we want to look through the top 2 to 3 sectors. So for this sake, we're going to use the top 3 sectors, and we're going to do the same exact thing for those sectors that we did on this industry list. So we're going to go back to the sectors and industries list. We're going to head over to performance again. We're going to sort it by the 1 week performers, and then we're going to click the next strongest sector, which is consumer durables. From there, we're going to head over to the industries tab, and then again, we could sort this by performance over the last week, some of the strongest consumer durable stocks. So now you have home building, motor vehicles, and home furnishings, and you want to add these all to your list. Now that we added these, you can see we have about 57 stocks, and now we're going to add our last sector and industries into this list. That way we're going to have all the top leading stocks and sectors in the market to be able to scan through. So again, what we're going to do is we're going to head over to sectors, performance. We're going to sort this by the last week, and then we're going to click the technology services sector because this was the third strongest. From there, we're going to click on the industries, and you see we have about 4 industries. We're going to head over to performance, scan these by the top 3 performers, and we have packaged software, information technology services, and then data processing services. All right, so now that we've finished up the scan and we have about 9 to 10 of the strongest industries within the strongest sectors, now you can see we have a list of about 188 stocks, but we just narrowed down the market, which has over 10,000 different stocks in it, to only 188 stocks in the strongest sectors, in the strongest themes, and in the strongest industry. So now we know we're looking at the best of the best. And from here, what ends up happening is the scanner will end up narrowing this down to the stocks that make sense for us to trade. Now from there, what I like to do is sort these by volume descending. That way I'm trading the most liquid stocks right away, or at least I have my eyes on the most liquid stocks. And now what this allows us to do is easily go through these stocks and scan for some setups that we can use for a potential entry. So remember, the most important thing of what we were looking for when it comes to the setups that we are looking to trade. We know that stocks don't go straight up, they move in staircases. So we're looking for a tight consolidation pattern for a stock to be setting up, and then it sets up and then looks for a big continuation with a breakout, or we could buy it into the key moving averages for one of our entry models. So for example, the first one on this list is the ticker Snapchat, and you can see this one doesn't really qualify for much of a setup because the stock just kind of went up and it's just been kind of bleeding down lower, not really setting up into the moving averages, more so just kind of pulling back, and the volume patterns are not really exactly what we want to see because there is high sell volume. But as I keep scrolling down my list, I could start to find some really good setups that are actually starting to set up in the way that we want these stocks to set up. So you could see right here, we have this ticker, which is the ticker PL, and it's been setting up in these tight flags and then making a breakout higher. And now it's actually doing kind of the same thing. Notice how it made a very big move up on a lot of volume. Volume has been decreasing, so it's much lower than the big move up. It's going sideways and it's getting super tight as the moving average is catching up. So now we can start adding this one to a potential watch list. And what you want to start doing is narrowing these down even more to potentially shortlist them to your favorite setups and your favorite stocks that look ready for a potential entry. So right here, I'm going to start adding the stock to a different watch list that I'm going to be looking for a potential focus list on the next day. Here's another potential setup that I found on the ticker NBIS. You can see this one made a very big move up. And since the last few days, it's been consolidating in this tight bull flag. Moving averages are catching up. You could see the pullback is very controlled. It's not on very big volume. The volume is actually decreasing, and it's setting up right into our 8 EMA, which is usually where we want to buy some of these leading stocks so we can add this to our short list. All right, guys, here's another perfect setup and the setup that I usually look for. This stock made a very big move up. Notice the volume that was coming into the stock as it made a massive move higher. And from there, you could see the volume was getting lower and lower and lower as the stock pulled back. Now it's setting up in a very, very tight kind of flag here right into the key moving averages. You can see the 21 EMA is kind of coming up. So not every single setup needs to be right off the 8 EMA. Sometimes a leading stock might want to pull back to the 21. And the most important thing is that it's developing a tight pattern, because we know that these are the setups that are usually going to lead to a bigger move higher. And we can add this one to our list. All right, so after going through that whole list, you could see I came up with about 3 stocks out of 188 stocks. This is how picky you need to be as a trader, looking for the exact setup that you want, knowing these things that we know, looking for a momentum within a stock, a big move up on high volume to ignite the move, low volume consolidation, and then looking for the right themes and sectors. You're going to start narrowing down a lot of different stocks. So now that you have about 3 to 4 to 5, potentially even 10 stocks, as long as it's a short list, now you're going to be looking at where could we potentially enter enter these stocks, right? That's the next thing that we're thinking about. Where's the entry? Where's the potential risk management? How do we actually execute on these setups? And we're going to look at the entry Bible that we had last episode to potentially look to enter some of these stocks. So the first thing is we know that there are 3 different ways that we can enter. We can look for an undercut, or we can look for a retest of the AEMA, or we can look for a breakout on a specific stock. Now, how do we know which one makes more sense? Well, there's a few different factors that go into it. First of all, you want to ask yourself, where is the market in terms of its cycle? So what I mean by that, we can click on the QQQ, which is the NASDAQ, because we're mainly trading tech stocks. You can see, where is the market? What is it actually doing? So you can see right here, the market is basically up about 10 days in a row right here. We have 2 red days, and we're setting up for a pullback into the AEMA because we are a little bit extended. Now, knowing this and knowing that the market might pull back a little bit because it's a little bit off the moving averages, we know that our main focus should be on buying stocks that are pulling back into the key moving averages because the market is likely to kind of do the same thing. Now, let's say if the market started to tighten up into the moving averages, kind of go sideways a little bit and then set up for a breakout. Now we're going to be looking more so for trades that set up for a big breakout on them. Now, even though I usually don't trade the main indexes like the SPY or the NASDAQ, what I usually like to do is use them as a gauge to what I'm going to be trading, how I'm going to be trading, and giving me an idea to the individual trades that I could take on individual stocks. So going back to our short list, you can see we have the ticker PL right here, and we understand we want to be buying this into the moving averages. So now we're going to come up with a plan of how we can potentially buy this. Well, first of all, this stock has been trending for the last few weeks. It's been moving very well, and you can see it's been respecting the moving averages. It's especially been respecting this 50 EMA, which is the last EMA right here in white, very, very well. Now we have a few different ways we can look to potentially buy the stock. The first one is going to be right off the 8 EMA, which is going to be the closest moving average to the stock. And this is usually where most leading names kind of respect. So that's what a potential entry could look like. So tomorrow, if the stock ends up pulling back into this level right here, we could use our 30-minute pivot entry to be able to wait for the stock to come into the 8 EMA, wait for a 30-minute pivot to occur, and then look to take the trade. Now, if you're not familiar with the 30-minute pivot and how any of these entry strategies work, guys, make sure to watch episode 5 so that you understand exactly how to be able to take the entries once we're able to find the right stocks to trade. So now that we know that this is a potential 30-minute pivot 8 EMA entry here on the ticker PL, that's what we could potentially set up for the next day. And what we could do is set an alert on this like so. So we tap the 8 EMA, we add alert, we put price, and then we add the EMA 1. This means whenever the stock ends up testing the EMA on the daily time frame, it will alert us, tell us that it's testing that, and then from there, all we have to do is wait for the 30-minute pivot to get our entry. Now going to the next ticker right here, you can see this is the ticker NBIS. You can see we're setting up for a very similar thing. We're setting up for a move right into the 8 EMA, and this would be the first test of the 8 EMA since a 71% move higher on the stock and a big breakout. So we know that this is likely to hold, and we know that buyers are likely to step in around this 8 EMA. As long as you have a 30-minute pivot that can confirm our entry, then we can get a super tactical and nice entry on this position. And then the last ticker is going to be SPIR. Now this one is already trading under the 8 EMA, so we have a few different ways that we can look to potentially enter it. The first one is we can look for that 30-minute pivot just right off of the 21 EMA, because sometimes leading stocks won't hold the 8 EMA right away. They might come down to the 21, or they might come down to the 50. Usually a stock will hold the 8 EMA if it's super strong. If it needs a little bit more time to rest, it can hold the 21 and then make a big move higher off of that spot. But this could be a potential entry strategy that you can look to take on this idea. The next thing that you could look to take is a potential break of the previous day's high. So right here, you could see this stock ends up putting an inside day right here, where the inside bar basically doesn't take out the high or takes out the low of the previous day. So it's an inside bar of the previous day right here. You can mark out the high and you can mark out the low. Now you can see it's trading within this kind of range right here. It used this level as resistance, but what happens if it breaks back through? Now it's going to break this trend line right here. It's going to break this key level, and it's going to break the previous day's high. So it's going to be a pretty much perfect entry for a potential move back up if it can get through that spot. Now this is called a breakout trade, and we did talk about how the market is a little extended to be able to do this, but if the market tightens up a little bit over the next few days, if the moving averages catch up, this would be a great potential opportunity for a breakout trade on the ticker SPIR. Now that is our first method of finding some of the best stocks within the market, and once we understand how to find these sectors, how to find these themes, we want to actually start making a larger watch list. And this is a watch list that I use 24/7, and I scan through pretty much every single day, and I recommend every single trader to have. This is called your sector and theme watch list. So now you're actually able to break down which stocks are in which theme and which stocks are in which sector to have a full list of all these stocks very, very quickly. And these are stocks that I trade almost every single day because I know that they're liquid. I know that they're the stocks that are leading within that specific sector or theme. And it's the ones that I definitely want to trade. So here's an example. You could see, for example, right here, we have all the FANG stocks. This is going to be all the companies that are the biggest in the market, basically the Mag 7 as well. It's going to be your Amazon, your Apple, Google, Meta, Netflix, Microsoft, Tesla, and also Nvidia. And these are going to be some of the biggest companies in the market. So I always want to know how these are performing because they tell me, all right, is the market really strong? Is it really weak? Are these stocks holding up? How is the tech market looking like? Then I'm also looking at oil stocks, for example. And this is extremely important because what you want to realize is that there's rotation within the market. Sometimes when the market is more defensive, when there's a potential recession coming, or the market thinks that there is some fear that's looming over the economy, these oil stocks are going to be a lot stronger. Defensive stocks are going to be a lot stronger. You're going to have consumer stocks going to be a little bit stronger as well. And tech stocks are going to get sold off because they're more risky assets, more risky stocks. So today, for example, you could see this whole oil sector was very strong. These were all a little bit on the green side. And then if you look at the NASDAQ, it was actually down a pretty decent amount today. The S&P was down a pretty decent amount. And you know that oil benefited from this because this is where some money kind of went into. It's called rotation. Now from there, you can see I have my data centers list. So I basically have all the list of data centers as well. I'm grouping these into a theme. Now, if you don't understand what a theme is, this is going to be one of the most important concepts that I'm going to talk about in this episode. A theme is basically going to be a group of stocks that is moving based on a specific catalyst or event that can be happening. And that's what you think about in a specific theme. So a theme might be different than like an industry or a sector because not every single stock within the industry might be within that specific theme. So for example, artificial intelligence has been the biggest overall theme in the market over the last 2 to 3 years, but there's so many sub industries and sub themes within that overall theme that you can start to break down, all right, which stocks and which companies are going to benefit from this. So what do I mean by this? Well, for example, data centers are a big part of the artificial intelligence build out because a lot of the big companies are going to need to collect a lot of data. They're going to need to store a lot of data, and this is data centers. But how are data centers actually built out? Well, there's semiconductors that go into it. So you have your GPUs and then you have your CPUs, right? And there's so many different components that go into a big build out of like data centers, for example, that you have to look at all the different stocks and all the different themes that are benefiting from the overall macro theme that's happening. So this is kind of called a micro theme. And these are things that you want to track. And that's why I use a sector watch list like this so that I know, all right, data centers could potentially be making massive moves. And what you'll notice is if you look at the actual chart on some of these data center stocks, they've been uptrending for the last few weeks, even though the market has been pretty weak. So it's been probably one of the strongest sectors in the market. And this is something you're going to start taking note of because the moment you do, and you can start taking note of these things, now you know exactly where you should be looking within the market in terms of the sector, in terms of the stock. And this gives you a reason for the stock that you're trading to go up. So remember, we just said a lot of stocks are benefiting from the artificial intelligence rollout. This is going to be your data centers, stocks that have a reason to go up because so many different big companies like those Mag 7 and FANG companies that we talked about are spending billions of dollars on this AI infrastructure build out. They're giving a lot of deals to these data center companies and they're benefiting a ton from this. So there's going to be a theme, a story, a narrative for these stocks to want to go up. So if the market is strong, if you have a good setup, there's a good theme and a good sector, now you can see how you have an incredible edge over other market participants. And now what you could also start doing within this theme and sector watch list is you'll start noticing that you'll find some sectors that are very weak, but also some sectors that are showing strength on the day. And this could show you where the rotation in the market is. So for example, you could see all the solar stocks are pretty much red, airline stocks, cruises, hotels were pretty much red. But let's see if we can potentially find a sector that was green. Well, here you go, right? Semiconductors, chips. This was a sector that was actually green on the day, and it tells you where's the money rotating to. Well, it's very easy to see when all the semiconductor stocks are green and the rest of the market is pretty much red. This is a sector that you know is leading. It's a theme that's very strong. And again, it's a part of that artificial intelligence build out. So it's got that macro theme going for it. Now what you could do is start scanning through the semi sector and you could start to look, all right, which is the strongest stock that we could potentially look for an entry on? So you could see AMD, for example, has been breaking out on the big time frames and breaking out on the big daily time frame as well, making new highs and pushing higher. And this could be a stock that we could definitely look for a potential entry on. Another great example example would be a ticker like this, ALAB. You could see that even though the market was down today, this stock was up about 10% because it's in the right sector, it's in the right theme, and it's got a reason to go up. It's got a massive breakout that's happening, and now all we have to do is put this on a watch list, track it, see if we can find a good entry on it. Now we can have a good potential candidate for a buy in the next few weeks. And then from there, you could see you have even more sectors that showed some strength. So you have small cap semis were showing you a lot of strength. You have the laser and LiDAR companies that were showing strength. Memory stocks were showing strength. And then you can kind of find and see these little cracks in the market where things are weak and where things are strong, and then start tracking these and understanding the themes behind this. And this is what really completely changed my trading, because when I first started, I had the right concept. I knew what setups to look for, but I didn't know which stocks and which themes to trade. And I got left behind because a lot of the themes and the stocks that were making the biggest moves were ones that had a reason to go up, and I wasn't searching for that reason. I was trading a random stock, a random sector, a random theme because it had a good setup. But at this point, that might not be enough, because the market is rewarding some of the best stocks, the best theme, and the best sector. And this could be, for example, a stock like SNDK. You could see on the weekly time frame, this one is up an absolutely tremendous amount, about 2,000%. And it had everything going for it here in August 2025. It had a super nice setup with this big weekly IPO base, had a big breakout with a lot of volume, and it was in the right sector and the right theme, and it had everything for it. And these are the types of setups that we want to look for. Now that we understand how sectors and themes look like and how to find the right stocks to trade as well as the right setup, I want to show you some setups and trades that I've taken in my career that were some of my best trades, and go over exactly how I found these setups, the themes that these setups were in, and also the actual setup on the technical chart. All right, now this is one of my biggest trades on the ticker Tesla, and let's start from a top-down approach. Well, at this point, the market was uptrending. This stock had a massive gap up, which is exactly what I like to look for with the ton of volume. So this is called an ignition move higher. And it was setting up right into the key moving averages, which is exactly what I looked for. The theme of this stock was it's an electric vehicle company, but it's also a company that Elon is trying to get into artificial intelligence. And there was a lot of hype for artificial intelligence at the time. So this is going to be like your robots, this is going to be like your autonomous vehicles, and all these different things. Now I entered this stock into the 21 EMA using that 30-minute pivot right there off the 21 EMA, and it caught a massive move higher, about a 48% move higher on that trade. Now you could see everything was going for the stock. It had a big move up on volume, low volume consolidation, high move back up with a lot of volume again, and that created the next leg up on the stock. Now, most people would sell out of their position right away after catching a 48% move like this. But me, no, I use an actual exit strategy to be able to exit this trade whenever the market told me to, not when my emotions told me to. So how did that look like? Well, this stock ended up pulling back into the 8 EMA, and see it did the same exact thing that it did here pretty much. And you can see it held the 8 EMA, it made another leg up. I actually added some more right here off the 8 EMA, because when you're in a winning trade, you can add it into the moving averages as well. See, the volume on this pullback was very low, and then again it picked up as the stock ended up going higher. Set up another little flag right here with the 8 EMA, made a big continuation move higher, and once it started to get extended from the moving averages, started to sell out of the position right here. And then once it started to close under the key moving averages, it closed under the 821 EMAs, sold some of my position right here. And then when it started to close under the 50 EMA, this is where most of my position got sold. But imagine if I would have sold this position right here right away, I would have missed out on a massive continuation higher on the stock. Now here's another trade that I entered that was one of my biggest trades of 2025. This was a trade that I entered on a breakout parameter. So this stock was setting up in a massive base, and this was in the quantum sector. So the ticker RGTI, quantum stock at the time, this was one of the most hyped sectors. All these stocks within the sector had massive weekly bases. So you can see right here, it was setting up in a massive weekly base, and it was looking for a big move to the upside. So what I did was wait for the stock to set up in a big base like so. And then when it started to break out, and you can see the volume coming in on that breakout, is where I took my entry right here. After the entry, I put my stop loss at low of day to manage my risk as always. And then again, I'm not looking to sell the position all at the exact same time on a first trim. I wait for the stock to make its first move up, trim into a big level of previous resistance like so. Then I'm out of the position about 25%, and then I have the rest to let ride. So from there, I'm not selling the position until it breaks under the 8 EMA on a closing basis. So again, most people would have probably sold full position somewhere here. I ended up letting this one ride all the way up to here and then sold some of the position right here when it closed under the 8 EMA, because right here you can see it never ended up closing under the 8 EMA. It just kind of held up. And again, a lot of times your first test of the 8 EMA, guys, on a leading stock, you can actually buy the stock right here and then look for a continuation leg on that stock. And last but not least, this is a recent trade that I took on the ticker Black Sky using our undercut and entry strategy. So undercut and rally of the previous low. And this one was also off of the 8 EMA as well. So when you combine those two things together, that gives you an absolutely amazing entry criteria. So this one had a beautiful breakout right here. It got through this big level of resistance. Instead of buying it right here when it broke out, because the market has been a little bit shaky, I waited for the undercut and the test of the 8 EMA, which came right here. Right when the stock undercut, I bought it right there. I put the stop loss at the low of the day, and then I ended up swinging this one. And so far, it's been a pretty big winner, about 41% move. And again, no reason to sell out of the full position because you're not breaking the key moving averages just yet. Can it break the moving averages? Sure. It still hasn't. And this is a trade that I want to stay in. Now, again, you want to start with a top-down approach. So you want to ask yourself, why am I even looking to trade the stock? Well, first of all, the market is moving higher. Second of all, what theme and sector is this in? Black Sky is a space exploration company and satellite company. And a lot of these companies that have been exploring space because of the administration, because of the SpaceX IPO, have been going higher. And this is where our theme comes into place, guys. This is how you're able to find these stocks, scan through the right stocks, scan through the right themes. That way you're able to find these leaders and potential stocks that have these narratives and have these reasons to go up. And then from there, I'm identifying the setup. So always start with the bigger time frames. If you look at the weekly time frame on this Black Sky setup, you can see it was breaking out of a massive weekly base. On the daily, it broke through a very key level. And then all we needed to do was wait for it to come back to the 8 EMA, buy it there. And again, next time it came into the 8 EMA, you could see this was actually another buy as well, right into the 8 EMA, undercut the previous day's low, and then you could have got another entry on that as well. And there you have it, guys. Now you know exactly how to find some of the strongest stocks within the market. Always know your themes, always be able to track these and find the right stocks within those themes, and start with your top-down approach. I hope you enjoyed this video, and I can't wait to piece it all together in episode 7 for you.